Folks, welcome to the 30-minute chart club. This is Bob Desmond, and for those watching this on the replay, this is a private group where we talk about similar charts each week, similar charts that we go over so we get a good feel for how they're trading. These are large cap stocks, and what we do is we take a look at the 30-minute charts, and we say, okay, what are the best setups as we go into the new trading week? And then we upvote them, we add them to a list. And this is last week's list: Airbnb, Google, uh, Broadcom, which we are currently in a trade on. Chipotle Mexican Grill is going to make it for a second consecutive week onto this list because we were bullish on it last week. Continuation move up last week as well into the new trading week. We're right on that call. Now, what we're looking to do is, believe it or not, we're looking to short-term scalp Chipotle Mexican Grill. I am not bearish on this stock whatsoever, but it's a little bit of extended. So what we may want to do is take advantage of the high implied volatility. I'm going to walk you through the trade and how we plan on executing it. So if you're not a member of the 30-minute chart club, you want to join in, please enter your email below in the video description area, and you'll get invited. I believe this one I have public today because we were so late with getting the invite out. So I figured, you know what, let's invite other people. But in the future, these are more closed group sessions. I like to keep them small because we want to stay on point. We go for about a half hour, and we formulate a game plan, and we execute going into the new trading week. I send out trade alerts to all our members. We have a 14-day free trial offer, so please take advantage and learn how we trade here at the Contrarian Trader. You don't need a large account. You can trade with a small account. I'm going to show you how you could use a strategy to short Chipotle Mexican Grill. Even though it's well over $1,000 per share, you could short it even with a smaller account. So I'll show you two strategies there on how to get short of it. And again, I am not long-term bearish on Chipotle Mexican Grill. In fact, I'm kind of bullish on it. So let's begin with, let's go to comments and say hello to people here. Pedro, there you go. How you doing, brother? I'm not expecting a big crowd today. I got this out so late. So if you're catching on the replay, please leave a comment below if you agree, disagree with the charts that we selected and why. More importantly, why and what would you have done differently? So let's get to it. All right, what we always want to do before we go looking at the charts, what we want to do is say, okay, how do the markets look on a macro basis? So we're looking at a 30-minute chart. So that's an intraday chart. So how does the daily chart look? So if the daily chart is looking bullish, okay, we want to be biased to the long side on a 30-minute view. If the chart of the Qs is somewhat bearish, then what we want to do is we want to look in favor of the short side. We're contrarians here, yes, but we do not ignore the trend. Oh, and if you're looking at my glasses and you're saying, you know what, his eyes look all messed up, maybe it's my computer. No, it's not. I sat on these again. The guy at my vision shop laughs at me every time I walk in because he goes, you did it again, didn't you? I think you can see it better this way. Hopefully. They're all twisted up. So I have to wear these tonight. I got to go see them tomorrow. They're closed on Sundays. So I have to go in there with my tail between my legs saying, help me yet again. All right. So let's talk a little bit about the macro view of how we're looking going into the new trading week. And I did the week ahead commentary yesterday with members, and that's what we do a macro view of our strategy going into the new trading week. I'm not going to go into the deep dive of that. If you want to become a member, again, it's a 14-day free trial. It's posted in the members area. Net, I am favoring the bull camp here. And there's a couple of reasons why I'm not overly bullish whatsoever, for multiple reasons. One, we're expensive. This market is very, very expensive. Two, the yield curve is steepening. Three, technically, you're losing momentum here. Stochastics going in the wrong direction. The however is that this is a bull flag setup. You saw a reversal bar on Friday on decent volume. So price and volume action trump all. I could look at these momentum indicators and say, whoa, 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 this is a problem here. But in the end, price and volume trumps all. So if we get a breakout here, the path of least resistance remains to the upside. So that being a known now, we know that we want to look at, by and large, most of these charts through the lens of a bullish setup. And I know I already spoke about being short of Chipotle, but it's going to be part of a grander trade. Stick around and I'll tell you why. So the 30-minute chart of the Trip Qs, how did we close out the session on Friday? Pretty good, right? Pretty good. What we did is we put in a higher low. It looks as though what we're going to do here is we are going to flirt with a triangle consolidation, and we'll see whether or not the bulls win, the bears win. We don't know. We're not that smart. The charts are going to tell us. If we break down below this little blue line, well, there's probably going to be more selling. If we break out above this little dash line up here, well, there's probably going to be a bit of buying. Simple as that. That's the law of probabilities, right? That's all technical analysis is. So, and if you're new to technical analysis, down below, 5-part video tutorial of my top 5 favorite candlestick patterns, free. So going into the new trading week, it appears as though we're going to begin the week with a continuation move up higher. Tonight, we're going to go live 6 p.m. Eastern Standard Time. We'll take a look at the futures action. But it looks as though we're going to proceed higher. Odds favor bulls. So as we go into these series of charts that are all 30-minute views, I'm going to rapid fire these through. I'm not going to go in great detail of why I'm bullish or bearish on each one of them, because way too many to get through. So silver, 30-minute chart. This is leveraged ETF. We don't want anything to do with this. Even though I'm long of it, it's not time to buy yet. We move on. And the dollar's looking pretty strong right now, so you don't want to buy silver. Airbnb, 30-minute view. Gap down, reversion to the mean. Not much happening here. I would be interested if the options were expensive. Let's validate. And remember, folks, all of these have earnings coming up. Options are way too cheap to sell them. I don't want to buy them. We move on. Airbnb comes off our list. Adobe, 30-minute chart. Nice close on Friday. This is interesting. On volume into the close. Outside reversal bar. Actually, no, I shouldn't say that's a bullish reversal bar. RSI hooking up. Stokes hooking up. Building momentum to the upside. Let's, I'm just going to make a note of Adobe for now. Adobe long. Amazon, 30-minute view. A little bit extended, pulling back here a little bit. I wouldn't want to short it. I wouldn't want to buy it right now either. We move on. Apple has had a heck of a rally. Double top. A lower high. Volume was good into the close. How do we close? We have a consolidation at 165. Let's take a quick peek at a daily chart. Nah, I'm not loving this at all. We move on. Broadcom, we're already in this one. Semiconductors, for whatever reason, have been down 3 consecutive weeks in a row. Underperforming technology. I think that if we get a breakout in the Qs, I do believe that we are going to get a rally in the semi names. So Broadcom got a little bit ahead of itself a couple of days ago. They sold it off. We liked it back here due to what it was perceived to be a breakout. And what was the 14th? Yeah, 14th. We were looking at a breakout here, and this is why we got long of Broadcom. Now, we got long once, we booked profits, got long again, and then we added more on this pullback. So I wouldn't initiate a new trade here. Not yet. This is the 30-minute chart club. We're looking at new setups. This is an existing trade. Will I make money on this one? I think so, but I would not initiate a new trade at this point in time. I would, however, on a pullback or a new higher high, look to add to my current position. But right now, it's not going to make it on our list. Boeing, 30-minute chart, a little bit oversold intraday basis. What do we do? We bounce. We have a higher low here. I think we need to make note of Boeing and that we may get a rally. I've already looked at the monthly chart of Boeing, and I want to take a look at the puts here. How expensive are they? Where my head goes first is always to the options market. I want to sell premium on expensive stocks or expensive options. And these options, you can see here, current IV percentile at only 6% are very inexpensive. So I would only want to be a buyer of these options, maybe a call spread with bull call spread. Otherwise, I would not sell these options at all unless you really, really want the shares. And if you're not overly convinced that we're done going down, then fine. If you want to sell the just out of the money put and try to get the shares at a cheaper price, cheaper price, less the premium paid to you, fine. But as an option writer, my cash flow writing business, this does not fit the bill. So I don't want to own the shares. So therefore, I'd pass on this options trade unless I'm going to buy the options. But that doesn't mean that we won't trade this nonetheless using common stock. So we're going to upvote Boeing here. We'll add that to the list. BlackRock. I don't like the banks here at all. Here was earnings. We've given up a lot of these gains. I don't want to touch BlackRock. I don't like the banks long at all. Chipotle Mexican Grill. Again, we spoke about this one. This was on our list last week, and it ripped up higher. Okay. I still think that there's more fuel in the tank coming into their earnings, but I think that they're a little bit extended here, and we may get a retrace. So what am I looking for? I'm looking for a continuation move up higher on Chipotle Mexican Grill. And what I want to do, I'll show you the trade that I would put on Chipotle Mexican Grill in a few moments when we go to this chart here with TrendSpider and we upvote each stock. We take a look at the daily chart, weekly chart, and we talk about strategy for each one and how we might want to trade it. So stick around. CMG is going to make it onto the list yet again. Now, Coinbase has been a past member of the 30-minute chart club where we have traded it. And Coinbase is getting obliterated along with Bitcoin. Now, let's see. Bitcoin is trading at current. There's a high correlation between the two. What am I doing? Wrong chart list. Bitcoin down 1% at current. So we should expect more pressure on Coinbase if we do not see a recovery in I want to do a correlation check. How correlated are the two? I want to validate my assumption and make sure it's accurate and it's not just I'm going by my gut, and we don't want to do that. We always want to be accurate. We don't want to assume anything. So let's put this above. And what this is going to tell us is the correlation, Coinbase versus Bitcoin. How are they correlated? They are extremely correlated. 91% of the time on a 30-minute chart. Sometimes it's going to vary by time frame. But at current, they are very, very highly correlated. So it's a fair bet to make the assumption that if Bitcoin opens down tomorrow morning, Coinbase is going to follow suit. So I think this is interesting in that I think that I don't understand why Bitcoin is getting sold off. Therefore, I want to focus on Coinbase to see whether or not we have a potential trade here. So I'm going to put this as a maybe on our list of stocks to watch. I'm not loving it. I don't see the setup here, but it's getting beat up pretty badly. And we are nearing historical support. So this is one where I just want to take my crayon out. I feel no compelling reason whatsoever to do anything other than watch Coinbase this coming week. The however is, look at that. They broke it out and they rejected it. That's a very bearish price action. So we are back down and into a trading range. We're probably going to see a 58 handle easily on this on Monday. So no rush to get long of Coinbase at all, but one that we may want to watch. CrowdStrike. This is a short. I'm not liking this at all. This is a bear flag setup. I think that this breaks to the downside. I would avoid this unless, of course, you want to short it. Let's check out the premium here. Do we have a capability of selling some call spreads, which is a short position? No, in this situation, if we're very bearish, we only have a current IV percentile of 3. That means that the options are very, very inexpensive. So I would be, if I wanted to short CrowdStrike, rather than buy the shares outright, I would rather buy a put spread and putting me short of CrowdStrike. Let's take a quick peek here. How bearish are we? Take a look at a daily chart. You can't short this. The reason is that on a daily chart, we are at the lower band of the rising uptrend channel. So you don't want to short into that support level because you get your face ripped off. So don't do that. The trend on a daily time frame is bullish, even though the 30-minute time frame is bearish. We do not short that. We're not that cute. Once we get cute, we lose money. So let's avoid. Now, if this is a bearish setup and I saw this bearish 30-minute chart, okay, then I'm looking to go short. But we're not going to be cute. There's other better opportunities out there than CrowdStrike. Disney, nothing to do here. DocuSign, this has been really beaten up. They reported earnings, I believe. Options are cheap. And when you folks are seeing me say options are cheap, what's cheap in my book? Well, if the option is below, let's say 25, to me that's pretty inexpensive. That's the 25 percentile of where it's traded, the value of those options over the past year. So that's pretty inexpensive. If I see premium above 40, 50, 60, 70, I'm looking to sell those options because they're overvalued. So we're not looking to sell premium here. We'd be looking to buy it if we saw an opportunity to the long side. They reported earnings back here early March. So we don't have earnings immediately in front of us. So let's take a moment. Take a look at the 30-minute chart. Let's take our crayon out here. What I'd also want to know is how much short interest is there? How many days to cover existing short positions? Oh, this is perfect. They're killing this now. They're selling it off hard. They broke it down below the lower band of support on volume. Look at RSI, Ultimate Oscillators hooking up, even though they're pressing it lower. So what we're looking for here, take a look at this. The price is getting beaten down. They closed at the lows of the week. What's RSI doing? Bullish divergence. So to me, this is interesting. Pedro, Coinbase moving out of USA. Did they say that? Is that a fact? Well, Bonnie Bean. Hey, Bonnie. Is that a fact? Covered calls or naked calls on Coinbase. It depends upon whether that question is very, very important. Let's take a quick peek at the daily chart here. I want to be bullish. I want to be. I can't just yet. I think this is probably going to pop in the next couple of days. I'm going to write it down. If we don't see anything else that's more compelling to get involved with and watch, we will we'll come back and we'll add DocuSign to the watch list. All right. So Coinbase, you're looking to sell covered calls. Okay. So to sell covered calls, you must be bullish on the stock. All right. If you're bearish on the stock, you want to exit the trade because you're not going to get paid enough premium on the covered calls to offset your downside risk on a bearish bet. So I have to make the assumption that you are bullish on Coinbase longer term and that you want to hold the shares and you want to generate income as we go through this corrective phase. So that being a known, would I sell covered calls? Sure. Why not? Why not? I don't care what the IV percentile is. If you own the shares, that money needs to be working for you. The caveat I would have is I want to make sure that, especially if you have a big capital gain already, make sure you do not sell those options too close to the money. Why? Because you spike the shares of Coinbase up and through that strike, and they call you out of that position. Guess what? You're paying taxes on all of that money that you made. So the key is make sure you sell a high probability call option, meaning there's a very low probability that those shares are going to be called away from you. So let's play around a little bit. What strike might we want to entertain? Well, we want to take our probability calculator out and say, okay, what strike works for me? So generally you use a 68 spot 27 percentile in the money probability chart. And I would go out no more than 45 days on this. And I would go out as far as possible. I would look to go out to, say, the June 2nd strike. That's what I've been eyeballing lately. See what the 80s to 85 strikes are paying you. I don't know if the options are in dollar increments here. They are. So if you went out to June, you sold an 81 strike, you collect a premium of about $1.80, $1.85 there or abouts, assuming that we don't gap down tomorrow. So yeah, I would sell the covered calls here. I would go out 40 days. That's when that at 45 days, that's when the time decay curve really begins to kick in on options and they start losing value quite a bit. So don't go out beyond 45 days because if this stock recovers and begins to move back up, those options are going to gain value. And you don't want that. You want it to lose value. You want time decay to work in your favor. So I hope that answers your question, Pedro. CrowdStrike, we did. Disney, we did. Docu, we did. DPZ, ripping up here. No trade, though. Google, no trade. This was on our list last week. Gold. Now, gold, I would not buy gold right now, GLD. What I would do, and we already did it, we already put on a position where we have opened up, I think it's a strangle that we did, I believe. Yeah, it's a strangle. It's a ratio strangle that we did. So I sold a deep out of the money call, sold twice as many puts because if I get the shares, good. I want the shares. I think gold is going to go up higher. I'm far more bullish on gold longer term than I am on equities. So we are in this trade. And why do we enter this trade? Well, look no further than what we were talking about earlier. The options, well, they've come in now. All right, so this is why we're profitable on the trade. When I opened up this trade, the IV ranking or IV percentile was at 50. Now they've taken some volatility out of the GLD. So you know what? I would walk away from this one. You can still do it if you wanted it. If you really want to get gold cheap right now, I would be looking at doing it near the money put option. What do we close? 184.25. That's right here. If you went out $10 away, collect a premium going out to June of about 50 cents around there. Not much. They took the premium out of this, so it's not as attractive as it was a couple of weeks ago when we opened up our trade. Okay, moving on. Meta in a downtrend channel. Interesting. What do we have so far? Adobe, maybe. Boeing, that's a definite. Chipotle, a definite. Quick peek at the daily chart here. No, I don't like it. I don't like it to the long side. Microsoft. Looks like it's breaking down. Let's go to the daily chart. Yeah, very similar chart as to what we're seeing on the Qs. And they lagged on Friday. So no bullish bet here. Moderna, I would never buy this stock ever. I would short it, but I would not buy it. Nike. Nike's interesting. Let's take our crayon out and talk about what we're seeing here. So Nike broke out of this full flag setup, and now we're putting in, we're putting in higher lows. We have a bit of resistance above. Volume's good into the close, a bit extended on Stokes. Let's take a quick peek at the daily chart. Nope, wrong symbol. Oh, this is going up. Yeah, I think Nike's breaking out. Because here's what we're looking at here is a continuation breakout on Nike. So this is the value of the 30-minute chart club, right? All we're doing is looking for opportunities for a continuation move up higher. We're looking for that setup, and we just found it with Nike. This is a bull flag setup on a daily time frame. So check the box on our macro view. We always want to make sure that the trade we're putting on is going in the direction of the higher level trade. So we're going to put it on a 30-minute chart trade. We want to make sure if it's bullish, the daily chart is rising as well. So Nike makes it onto the list. Moving on, Netflix. Let's check out the IV rank. I want to check out the options on Nike as well. The options on Nike are very, very cheap. So I'll show you the trade here in a moment once we get to it. But Nike, I'll display for you the trade on Chipotle Mexican Grill and Nike on how we're going to set up the trade using options. The options are extremely cheap. Therefore, we don't want to be sellers of them. We want to be buyers of them, because what happens is if the shares move up higher, well, then there's not much more downside in the value of the options. So therefore, you may get some demand for the options on a continuation breakout, expanding out volatility. So you're making money on IV expansion and on the price action in going your direction. So that's why I like Nike besides the chart. NVIDIA, no trade here. PayPal, no trade here. This is just a dead cat bounce. Qualcomm, really weak. Let's take a look at the daily charts. Yeah, I love the company. We got to watch this. Possible higher low. Semis have been weak 3 weeks in a row. If we get a breakout in the Qs, they're going to rally. You're looking at best of breed here. So I'm going to make a note about Qualcomm to watch it throughout the week. I don't think it's going to make it onto our list, but certainly one to watch. Shopify. Shopify has come back to life here. So what we're looking at on Shopify, before we get involved with the 30-minute chart, let's validate the daily chart. We'll come back to this. Yeah, okay. So we have a bullish uptrend channel, let's go back. Let's go to my stored chart of Shopify, and let's do this. So here's your bull flag setup. I don't know why this is not letting me do this today. There you go. Okay, so we broke out on Friday. Volume was light. That's not a good thing. We don't want that. But it doesn't rule it out as a trade. Now, if we get a continuation breakout on Nike on Monday on volume, that would be a very attractive trade. So let's go back to the 30-minute chart. Let's spend a moment here. Shopify. So here's the breakout, right? You see it broke out here on this big white candlestick, stalled, pulled back, retest, held, continuation breakout. Was there volume? Yes, there was. Check that box. We like Shopify. Shopify makes it. So we have Boeing, Chipotle, Nike, Shopify. Let's scroll through the rest really quick. See if there's anything else that really compels us. Target. I try to put on an options trade here. I don't know if they're still expensive. They are. There are. So Target, interesting as an options bet, but not my top pick here as a continuation move up higher. Let's take a quick peek at a daily chart. Nah. Salesforce, they have earnings coming up. It's a good-looking chart, but they do have earnings. Wow, this is going up higher. Wow. Really nice recovery here. When do they report? I'm looking to see when they report earnings. Earnings due date 5/30. All right, so we have some time there. We have some time. We have competition. CRM. Now, CRM, we'll come back to these in a moment and go over the weekly charts. But the 30-minute chart's looking good here. I think this is going to get a continuation breakout into the next week. All right. I got to decide. Boeing. I think Boeing may catch the boot here. Yeah. All right. Boeing catches the boot. This is a consolidation at best, a potential rollover at worst. So Boeing comes off the list. It gets replaced with Salesforce.com as our top 4 going into the new trading week. You may be asking why 4? Why not 6? Why not 8? It's too much. It's too much. You want to focus on a few stocks you've identified, and if you're very uh if you feel that you've reached a point in consistency of profitability where you can expand out to 6, 8 stocks, fine, so be it. Go for it. But my wheelhouse is 4. I like to track 4 stocks. That's pretty much always been my style. So that's the way we're going to play it. If you want to make it 6, that's fine. But I become hyper focused on those names. Twilio looking good here. What's the daily chart looking like? Daily chart's not looking good. All right, so I'm going to pass, but that looks interesting. What are the options? I would sell puts here. Puts are nice. Puts are nice. 34%. Do we have support below? We have support down here at around 52.50 per share. So we'll wait on this one. Tesla, we're already positioned here on Tesla. Implied volatility has come in, so this is not a trade that we're going to want to put on. We're actually profitable with our strangle. Wow. IV rank of 0 now. Incredible. So we won't sell premium here. You're not going to get paid. Walmart, that's a continuation move up higher. That's a good looking chart. This is going up higher. But it doesn't have the beta that we're looking for. Zoom, they're going to report earnings soon. When's Zoom report earnings? $5.23. Sell some puts in here. No, you can't. I don't want the shares. I want the cash flow, and the options are too cheap. All right. So let's do this. First, we're going to go with changing Airbnb out, replacing with CMG we already have up. Shopify, if I can type it right, we'll populate that. Folks, we're using TrendSpider Automated Technical Analysis, 35% discount code below, and I give it away free with our silver and gold level members. What else do we choose here? CRM. And Nike. All right, so our upvoted stocks that we're going to be tracking, the top 4 for this coming week are Shopify, Salesforce.com, Nike, Chipotle Mexican Grill. Now, Chipotle, I started out by saying that I wanted to short it using a very low risk option strategy, but I only want to short it for a quick scalp. That's it. So otherwise, I'm probably going to want to be long of it. And I won't short it unless it gaps up. I want it to gap up and become more extended intraday, requiring it to pull back and then resume a move up higher. If we don't get it, we pass. Now, let's begin by taking a look at Shopify up first. We're going to take a look at a weekly chart. How are we looking from a macro perspective? And what did we do last week? And I want to pause here. Notice how this is the 30-minute chart club, right? But we're not losing sight of the macro, the higher level view. You have your 100,000-foot view of the battlefield. That's your weekly chart. Then you have your 50,000-foot view of the battlefield. That's your daily chart. And it goes down from there. So if your macro view isn't setting up to validate your 30-minute view or vice versa, avoid the trade unless you're going to be in and out for a scalp. Otherwise, if you're going to carry a stock overnight, that's when the real risk comes in. That's why your day trading buying power is so much higher than your margin buying power. Because if you don't carry it overnight, well, your risk is a lot less from having your face ripped off. So if you're going to carry a stock overnight, as we do, then we want to make sure our weekly charts, our daily charts are validating what our 30-minute charts are telling us. That is a part of our risk management. So Shopify broke out last week. Now, when might we want to get involved with getting long of Shopify? We want to see if it pulls back, retest support. We'll give it a little bit of sensitivity, not too much. There we go. It doesn't have to be exact. TrendSpider allows for sensitivity, and that way it alerts us because this is a rules-based approach. If this, then that. If Shopify pulls back, retest, okay, we enter small position, see if it holds. If it fails or breaks back down below support, well, we exit because if it's a failed trade, it's a failed breakout. If it holds and we get a continuation move up higher, guess what? It's earned the right to be a bigger portion of our portfolio. We add more to the position. So, shop. Weekly breakout point retest. We get long. We keep this active. A couple of weeks. We're good to go. Now, drilling down to a daily chart, completely validating everything that we want to see here. We already went over the daily chart already on the other charting software. This is just validating what we saw on the other charting software, a breakout out of this wedge formation. Volume could have been a little bit better, but you know what? We'll take it. 30-minute view. My internet's so slow today. Sorry. All right, so this includes the after hours price action. We're going to get rid of that. Okay, that's better. All right, so what do we do on a 30-minute time frame? We broke out on Shopify. What we want to see on Monday is a quick pullback on Shopify, and we want to step into the breach. We want to buy that pullback. So I had the weekly setup alert, the weekly alert setup. Now I want a 30-minute alert setup. Touch, bounce. Shop. Put notes to myself here as well because I forget. All right, so our alert is set. We're good to go. Shopify in the books. Our alerts are set. Now we set it and forget it. If our alerts don't fire off, we're not going to trade it. CRM. Again, weekly view, CRM. We have a breakout. We're looking for a retrace and a retest. That's our ideal setup. Keep a little bit of sensitivity. If you go long, are you setting a stop loss or let it breathe for a while? Well, here's so that's a great question, Tazi Wazy. I love that name, by the way. That's a great question. So the question is basically what the question is risk management. Okay. So the reason why we've identified that we have a setup on a 30-minute chart and we're looking for a continuation breakout. It's being validated by the weekly chart. But why aren't we just going to go stepping in on Monday morning and just buying the shares? Because that's inappropriate risk management. So to your question, if we see a pullback and a retest and our alert fires off and we go in and we begin to nibble on the shares, we'll give it a little bit of breathing room. Just because it retests the support level doesn't mean it's not going to spend a little bit of time intra-week below that support level. But by Friday, end of business, it had better rally back and close back above that support level, because if it doesn't, then that's a failed breakout. And then we want to avoid it. We only added this, let's say our goal is to buy 100 shares. Well, on that pullback, maybe we bought 25, 30 shares max. Well, what's our loss? Really, it's very, very small. So we'll let it breathe a little bit using your vernacular. I like that. But as long as by the end of the week, it closes back above this support level. And no, I would not go buying it where it closed on Friday. I want to wait for the pullback. That's the discipline. And we'll look for other areas where it makes sense to go long of the stock. We may not get this pullback right away. We may never get it, but we'll look for different rules. We want to find rules that we need to adhere to. So that way, to your question, if that rule fails, meaning the rule fires off, we get the okay to enter, but it doesn't work in our favor, well, then we got to leave. We got to get out. So small loss. We live to play another day. Great question. Thank you for that. So drilling down, daily view. All right, so this is the power of the automated trend lines. I did not put these lines up here. What they represent is resistance. These are the algorithm, the AI that generates this. Click of a button, bam, there you go. You have an ascending wedge formation. You could put alerts on top of these levels here. I would go with the top one, because if you buy initially above this resistance level in red, well, you got another resistance level immediately above. I'd rather wait for the breakout above this resistance level if I'm buying a breakout, right? Suppose we don't get that pullback and a retest. Well, I'm going to have to buy the breakout. That's the next rule that needs to fire off. Now, take note, unlike this pullback where I use sensitivity in purple, meaning just in the neighborhood, it doesn't have to hit exactly that breakout point. But when we're talking about a breakout where I want to enter a trade on strength, I want to make sure that it doesn't fail. So what I want to do is I want to wait A, to the end of the day, and B, I want to make sure that this stock is trading above this resistance level. Now, I mentioned earlier that on a pullback, we'd want to enter 25, no more than 30% of our intended allotment. On a breakout above this resistance level, you already had that allotment on. Well, then you want to add more, right? So the stock has earned the right to be a bigger portion of your portfolio because your initial thesis is accurate. It's a strong stock. And guess what? It just broke out and it's only getting stronger. Therefore, add more capital to that trade. Press the trade, lean into it. There we go. Keep that active for next week. So really nice daily chart here. Volume rose on Friday, still below average, but you know what? It's rising. Good stuff. It closed at the highs of the day. That's what we look for here. 30-minute chart. Really nice. I mean, really sound setup here. Right? It broke out on the 21st, consolidated gains. Here, retest 1, retest 2. Note how it was trading below the support level, right? But ultimately, it closed out the bar back above the support level. That's what we're looking for. And ultimately, the day was resolved with a breakout above resistance. Your ice cubes are annoying? I don't know what that means. Can you elaborate? Okay. So CRM looking good here. I'm going to create an alert here on a pullback. A little bit of sensitivity. All right, we're good. So CRM, good to go. Now, we spoke about strategy here with Salesforce.com, right? So going back to the options, we have a stock that's trading at around $200. Not everybody has that kind of capital in their wallet or in their account. That's fine. So the way I would play this is note how inexpensive the options are. You have an IV percentile at 7%. Why do we want to tie up our capital in buying the common stock with all that money at risk rather than simply buying a call spread? So let's talk about what that might look like. So a call spread on CRM, I would do a 30-70 delta, and I'll show you what that means. So what we're going to do here is create two tranches of options. One, we're going to look to buy. Now, when we buy options, we do not go any less than 50 days. In fact, I would go as far out as July. Why? I don't want the time decay. You want to give yourself time to be wrong to allow the trade to work out. I know the options expiring sooner look a lot less expensive. There's a reason. It's because they're decaying very, very rapidly, and nobody wants them. So you want to go longer dated, and I would go with, right now, this is a 61 delta. Let's go with a 190. We can go a little bit better. Oh, they don't give me the strikes for. Oh, they don't have enough strikes here. Really? What's this all about? That's strange. I'm going to go out just for the argument's sake so I can show you what I'm talking about here. I'm going to go out to August. Not that I would put the August expiration on. I would go with the Julys if they had the strikes available. Well, so let's go with, what does 185 look like? That's a 70 delta. Good. And then what we do is this. Okay. This is close enough for government work. All right. So what we would do here is buy to open. One contract, August 18, 185 calls. Simultaneously, we would sell to open 818, 230 calls. Now, what does this do? Well, by selling this premium or this option above the strike on your long call, you're bringing in income. So rather than paying the midpoint, say you get filled to the midpoint, $24.97 per contract, that's $2,497. Well, what you're doing is you're also getting paid $4.25. So the risk capital work here is reduced. So it goes from $2,497 down to $2,045. So your max gain here is $2,455. Your max loss is $2,045. Now, a lot of people say options are risky. Yeah, if you don't know what you're doing. But I know going into this trade exactly how much I'm going to lose. Tell me another guy out there that's carrying a position overnight that can say, and he's long of the common stock, does not own puts on it, that he knows exactly what his max loss is going to be on that trade, even if he's got a stop loss. Because what if the stock gaps down below his stop loss price? Either he takes off that stop loss before the market opens up, or he gets executed at the market and he gets annihilated. So in reality, if you're using options appropriately, they're far less risky than what is buying the common stock. You're using less capital, right, on when you're buying cheap options, and the only downside is that you're limiting your upside potential, and that's it. But your probability of profit is pretty good here, and your risk management is pretty rock solid. So that's the game plan with CRM. Tom, hey Tom, how you doing, man? We're not doing requests on this. We stay just specific to individual names. Tonight we could talk about it if you want. All right, we're going to wrap it up with Chipotle Mexican Grill. Okay, so let's begin as we do. Weekly view. We're bullish on the stock. Short-term bearish because I think we're going to get a pullback. And my thesis is validated a little bit here in that we have on a weekly chart, the algorithm's picking off resistance above. So, and that resistance level will be this week at around 1825. I want to make note of that. Okay. So this is a bullish chart, longer term, but we've come a long way. And we are at the upper band of the rising uptrend channel. Daily view. Now, this is a consolidation that tells me that CMG wants to press higher. And the one problem I'm going to overlay the weekly resistance levels on a daily chart. Why is it not showing here? I think it coincides with these right here. That's why. Oh, no, here we go. I got to click the button. There we go. So that weekly resistance level that we were looking at earlier on the weekly chart here, I just overlaid onto a daily chart. It's represented, or was represented. It's gone now. Oh, no, because it switched to weekly, monthly. All right, so I have it back now. So what I want to do here, I want to set up an alert on CMG. I want to know if it breaks through, bounces, touches. Okay, and I'll show you what that trade looks like in a moment. So we know our resistance levels. Now let's go back to the 30-minute chart, see how we're looking. So we know that the weekly chart is bullish, daily chart bullish. We're probably going up higher on Chipotle. They're probably going to gap it up, which is why I'm not thinking about buying it right now. If they don't gap it up and they just consolidate it, well, then I'll probably look to buy it first before I go looking to short it. And our resistance levels are up here. So we know that the shares closed at 17.99, and looks as though we're going up here. So the path of least resistance remains higher. Nice consolidation. I would not short Chipotle Grill at the open unless we are at these resistance levels. So let's take a look at what the chart would look like, or the trade would look like, if we get the rally up to this resistance level here. Now, the first thing we want to validate is whether or not the options are expensive, because we're looking to sell them, and they are. They're in the 40th percentile. Attractive. Not great, but it's good enough. So what I want to do is let's pretend that the closing price action of 1800 is where resistance is, okay? We'll keep it really simple. So bring up the portfolio again, the trading tool, and CMG. So now we're looking to sell premium. It's different than what we were going to do with Salesforce.com. in that we were looking to buy the premium because the premium, the options were cheap and the setup was bullish. This one here, we know that the macro trade here is still bullish, right? But it's going to pop up higher, hit resistance, and it's going to back off. And on that gap up and into resistance, what I want to do is I want to sell premium because I know the options are expensive. So I want to go no less than or no greater than 45 days. So we're looking at the 6-2 options. Let's take this off. Now, what I want to do is I want to sell a 10 delta call option. A delta is the percentage move for every dollar that the shares move. So if it's a call option and the shares move $1, well, the option gains in value 10 cents. If the shares decline in value, if it's a put option, you're going to get a gain of 10 cents. So, and you have a negative 10 cents on the call option. So I'm looking to go way out, probably 1990, around there in 2000. No, not far enough. 2060. All right, so we closed at 1800, right? But we're looking to sell into June a 2060 call that would generate us, assuming that we got filled at the midpoint, a credit of $1,230. But note here how this says unlimited max loss. If you don't have the capital in your account, your broker may not allow you to do this trade. What they may allow you to do is if you put a cap on your max loss. You need to define that max loss. This is what you call an undefined risk trade. So why would I do it? The reason why I would do it is because the probabilities are in my favor. I know it going into the trade. Let's take a look at what the probabilities are. So we have the 2060 strike. So we take a look at our probability calculator. I'm not going to look at the options to see how much money I'm going to get paid. I want to know what my risk is here. So June 2nd, we're looking to sell the 2060. That's about an 87% probability of profit on that trade alone. But so I'm taking unlimited risk, but because I know my probabilities of profit are about 87%. So that's pretty good. Now, if your broker doesn't allow you to do that trade, there's an answer to that. There's always an answer. What you want to do is change this from an undefined risk trade to a defined risk trade. You're still doing the opening trade of buying a 2060 call, but now what you're going to do is you're going to cap. You're going to cap the max profit, but you're going to also minimize your risk. So I would buy. I'm going to sell to open the 2060. And simultaneously, I would sell to buy to open, let's say a nah. There we go. Sell to open to buy to open. So now you define your risk. And for whatever reason, it's not popular. Is this, did I enter this correctly? So you've now, I don't even like this strike. That's better. Now you see that you have a max loss here of $5,605. Now it's not a great profit, but the probability of making that profit is around 87%. So that's the trade. If you can't sell naked calls, it's very, very high risk, obviously, but that's the way you get around. Your broker's saying you can't do this trade. You put a cap on your max loss, and they'll let you do the trade. So that's it, folks. Thanks for being here. Don't forget, tonight is going to be Sunday Night Futures Live. Join at 6 p.m. Eastern Standard Time. And Tom, I know you're always on. We'll go over your symbol tonight. We're going to go over the opening futures action. We're going to talk about the headlines that are coming out this week, earnings coming out this week, risks to the markets, outlook for the markets, and of course, the futures action. Don't forget, 14-day free trial to service, 14-day free trial to my service and TrendSpider. Get it free with our silver and gold level members. And what else? If you're not ready to join my service, at least get TrendSpider, automated technical analysis, 7-day free trial offer. I give you a 35% discount code. Use the link below, CON35. Hey, this talent. Happy Sunday, friends. Join. Thank you, talent. Thank you very much. All right, y'all. Like, subscribe, whatnot. And don't forget, if you're watching us on the replay, we are not always public. All right. We did today. And the reason why we don't go public all the time is to avoid. Thank you, Tazy Wazy. Appreciate it, man. To avoid spamming and unwanted comments. We want to stay focused on the stocks that we're watching. Join the 30-minute chart club. Link below. Everybody have a profitable trading week. Hopefully, I'll talk to you tonight. Be well.